From 2022 to 2023, the Federal Reserve raised interest rates to fight inflation. This made rates on high-yield savings accounts, CDs, T-bills, and other savings options to go way up. But now that inflation is cooling off, the Fed is starting to lower rates, which means savings rates will probably drop too. So if you want to grow your money in a savings account, consider locking in a high rate now with a longer term option like a CD. It's a safe place to keep your cash while earning a good return. A CD, or certificate of deposit, is a type of savings account where you agree to keep your money in a bank or a credit union for a set time, like 3 months, a year, or even 10 years, in exchange for a higher interest rate. CDs usually pay more interest than savings accounts, with some offering over 5%. The best part is that the interest rate is locked in for the entire time that you have them. So if you get a 1-year CD with a 5% interest rate, you'll earn 5% for the entire year, even if rates go down. The catch is that your money is locked up for the full term. You can take it out early if you want, but you might have to pay a fee or lose some of your interest depending on the bank. So it's best to wait until the CD ends to avoid penalties. Now that you know how CDs work, let's look at some of the best ones with the highest rates to help your money grow. Just keep in mind that these rates can change anytime and are accurate as of the time of filming this video. Literally, while I was working on this video, the rates dropped twice. So if you're serious about locking in a high rate, make sure to act fast before they drop even more, which they probably will. First up is Quantic Bank. I chose them because they don't charge monthly fees. You only need $500 to open an account, and they're FDIC insured up to $250,000, which means your money is safe up to that amount if the bank fails. Now, they currently offer 6 CD options, with the shorter ones offering better rates. The rates are 4.95% for 3 months, 4.6% for 6 months, 4% for 12 months, 3.35% for 24 months, 3.25% for 36 months, and 3% for 60 months. Personally, I don't recommend their longer term CDs since they pay less than 4% and you can get better rates elsewhere. But the 3, 6, and 12-month CDs are great. To put it in perspective, if you put $20,000 in the 3-month CD, you could earn about $248. In the 6-month CD, you'd make around $460, and in the 12-month CD, you get about $800 just by letting your money sit there. Obviously, the more money you put into the CD, the more you'll earn. Just remember, the most you can deposit is $1 million, and FDIC insurance only covers up to $250,000 per person. So I don't recommend going over that amount unless you add somebody else to the account for the extra coverage. Now, you could take your money out early if you want, but there are penalties. So feel free to pause and check them out if you like. Just so you know, when your CD term is about to end, Quantic will send you a notice. You'll then have 10 days to decide whether to withdraw your money, renew the CD for the same term, or start a new one. If you don't do anything, your CD will automatically renew for another term at the current interest rate. Next up is Lending Club. What I like about them is that they're FDIC insured up to $250K, and you can choose to have your interest either added to your CD or sent to your Lending Club checking or savings account every single month. This is pretty cool because it allows you to access your interest monthly instead of having to wait until the CD term ends. Now, the minimum deposit to open an account is a bit high here. You need at least $2,500, and you can deposit up to $500,000. But to play it safe, I honestly wouldn't deposit more than $250,000 since that's the FDIC insurance limit. Anyway, Lending Club has 6 CD options with the following rates: 4.8% for 6 months, 4.7% for 10 months, 4.1% for 1 year, 4.4% for 18 months, 4.15% for 2 years, and 3.4% for 5 years. Like Quantic, the shorter terms have better interest rates, so if you want a great return without having to lock your money up for too long, the 6, 10, and 18-month CDs are great options. On the screen, I'll be leaving the early withdrawal penalties. Feel free to pause if you like. Next up is Basque Bank. They don't charge monthly fees, are FDIC insured up to $250,000, and you only need $1,000 to open an account. Basque has 6 CD options with the following rates: 5% for 3 months, 4.8% for 6 months, 4.6% for 9 and 12 months, 4.2% for 18 months, and 4% for 24 months. These rates are honestly great, especially if you're looking for a high interest rate CD for less than 24 months. By the way, if you're not sure which CD term to pick or you don't want to lock up all your money, you can also try a CD ladder. This means spreading out your money across different CDs with different end dates. It's a smart way to get great rates while also having regular access to some of your cash. Anyway, here are Basque Bank's early withdrawal penalties. Pause if you like. Next, we have Marcus by Goldman Sachs. I chose them because you only need $500 to open an account. You can deposit up to $1 million per account. They have 24/7 customer service and they're FDIC insured. Plus, if you open a CD and deposit $500 in the first 10 days, you could automatically get a higher rate if the rate for your CD term increases. For example, if you open a 1-year CD at a 4% interest rate and a month later, the rate for that term goes up to 5%, they'll automatically increase your rate to 5%, which means you'll make more money. Another thing I like is that you can choose how you get your interest paid. It can be added to your CD balance each month, or you can withdraw it to your savings or external bank accounts every month without fees or penalties. Now, Marcus offers different types of CDs, but let's start with their no penalty CDs. These CDs are great because you can lock in a high rate and withdraw your money anytime without penalties, as long as your account has been funded for at least 7 days. However, if you take out your money, your account will be closed. You can choose from 7, 11, or 13-month CDs, all at a 4.4% interest rate. Although these rates aren't the highest, they offer more flexibility and you won't have to pay fees or penalties if you need to take out your money for whatever reason, so it's technically a win-win. Next, we have the Rate Bump CD, which offers a 4.4% interest rate for 20 months. This CD lets you lock in a high rate today, and if rates for your term go up, you can switch to the higher rate without any fees or penalties, which is pretty cool. Next, we have the regular CDs. The rates are 4.5% for 6, 9, and 12 months, 4.25% for 18 months, 4% for 2, 4, and 5 years, 4.15% for 3 years, and 3.9% for 6 years. Keep in mind there are early withdrawal penalties for these options. Feel free to pause and check them out. So those are my top CD picks right now that most of you can easily access by just opening an account. Now, there are other options with higher interest rates, but many come from credit unions with stricter requirements like needing to live in a certain area, work for a specific employer, or having low deposit limits. Regardless, here's a list I got for you guys with some of the highest CD rates currently available for credit unions. Now, before you invest in CDs, there are some downsides to keep in mind. For one, your money is locked up, which can cause you to miss out on other investments with potentially higher returns. CDs are also less flexible than savings accounts because most have early withdrawal fees and penalties. So if you want good returns with a little more flexibility, some great alternatives would be high-yield savings accounts, money market accounts, T-bills, or bonds. Just keep in mind that with some of these, you might not be able to lock in your rate. You can learn more about these accounts by watching this video next. Personally, I like high-yield savings accounts because you can access your money anytime and the interest rates are pretty close to CDs, even though they're not fixed. One of my favorites is the SoFi checking and savings account, which is currently offering a limited time sign-up bonus of up to $300 if you set up direct deposit, plus an extra $25 if you sign up using my link down in the description. That $325 bonus is like earning 5% interest on $6,000 in a CD. So I'd rather get this account, grab the bonus, earn 4.5% interest on my money, and still access my money whenever I want. But of course, that's just my preference. Remember, you don't have to keep all your money in one place. You can put some in a high-yield savings account and the rest in CDs or other options that work best for you. With that being said, if you're looking to grow your money even further, don't forget to grab my free checklist down in the description. I've packed it with tips to help you find the best high-yield savings accounts along with my top picks. And if you like this video, you might also like these other ones, so feel free to check them out. See you on the next one.